Market structure. So this is what we're going to be dealing with today. Market structure just tells you the directions of the market. It tells you what trend is the market now. That's what market structure tells you. So there are three types of market structure. We have the uptrend, the downtrend, and the ranging market. We have the uptrending market. We have the ranging market. So these are the three types of markets we have. The uptrending market, you can also call it the bullish market. The downtrending market, you can also call it the bearish market. And for the ranging market, you can also call it consolidating market. So these are the three major kind of market structure we have. The uptrending market, the downtrend market, and the ranging or consolidating market. Now, like I said, the market structure tells you the directions of where price is going to. Basically, it's telling you the trend of the market. So, which is what you're supposed to be obeying. If the market is telling you that this market is in an uptrend, that's what you're supposed to be focusing on. You also focus on just to buy, because in an uptrend, they're looking to buy. If the market says the market is the downtrend market, you want to be focusing on selling, because the market is in the downtrend market where there's opportunity to sell. Then in the ranging market, you are expected to wait for the market to give you direction, because the market is just moving sideways. So let's explain them more in details. So the first one, which is the uptrend market. So this uptrend market now tells you that the price keeps moving to the upside. It's an upward movement. Price keeps forming a highs and lows to the upside. Now it keeps breaking structures to the upside. So an uptrend market is when price keeps breaking structure to the upside. Price keeps breaking structure to the upside, where you can see it forming something like higher lows. This is it. So in an uptrending market, price keeps moving to the upside, breaking structures to the upside, forming higher lows and higher highs. It keeps breaking these structures to the upside, forming higher lows and higher highs. That shows you that this price is in an uptrend movement. So what are you looking for in an uptrend movement? Is to buy, because there's a lot of buyers on the market at that point. So an uptrend market is when price keeps going to the upside. It just keeps breaking structures to the upside, forming higher lows and higher highs. A new high is formed, and that new high that is formed keeps having a little retracement to form a new lows. Then the new lows then break up again to form a new highs. Something in this format. When you see price moving to the upside, it creates a structure here. Now, this structure that it creates, you will see this structural points here at the top side. You see these structural points here. Now you have your higher lows here below. You have your higher lows here. Then this high that it created, this higher low created, is meant to be your higher highs. Now, what do you think price will do? Price creating these higher lows, price forming these higher highs from these higher lows. These higher highs will then have a little retracement to the downside to create a new higher low again. And what do you have? This higher low then break this structure. This current higher low then break this structure to form a new higher high. It breaks this structure to form a new higher high. Immediately break this structure, a new higher high has been formed. You have a new higher high. At that point, you have a new higher high. Now, this new higher high will then create a new structure. It will create a new structure that will wait for price to come and take it out again, or breaks it out again to form a new higher high. Now, this new structure that it created went down again with a retracement to form a new higher low. You have your new higher low here. You have your new higher low to keep the uptrend movement. You have your new higher low. Then this new higher low then went up again to break this structure. To form a new higher high. This is it. Then you have your new higher high. Yeah. So this is the context of an uptrend. When price keeps moving to the upside, breaking structures to the upside to form new highs and new lows. You have your new higher high. So this is how the continuation of an uptrend keeps moving. Price create a structure, it will break the structure, come down again to form a new low, then have a structure again, break the structure to get a new high. This is it. So for every market breaks to form a new high, you have what we know as the break of structure, because at this structural point there's a breakout to form a new high. The break of structure, we can represent it as BOS. Let's make it smaller. So this is how the uptrend continue moving. So when you have an uptrend movement that keeps forming this structure, note that this is a high in an uptrend. This is a high in an uptrend that you want price to come and break out before you can call it a break of structure to the upside and for price to continue the trend. This structural point here is a high that you want price to come and break out to form a new high before you can continue calling it an uptrend or a break of structure. So once this structural point is broken, that's when you now have a break of structure there. And once you have a break of structure, you find out that this new high that has been created, price will then create another structure. It will now create another structure that wants price again to come and break through. Now a new structural point has been formed. Now for it to be formed, it wants price again to come and break it again. Until price break this point, it won't be called a break of structure, or it won't continue the uptrend movement. So you want price to break this structure for it to be called for it to continue the uptrend movement, and for that point to be called a break of structure. It's as simple as that. So once you have a structural point like this, that is moving to the upside, that wants to continue the trend, before it can continue the trend, it must break this high structural point. It must break it. And once that happens, once it breaks through, it has continued the trend, and also this area has been broken and called a break of structure. So until that happens, this place can never be called a break of structure, or this trend can never continue. So if you are looking for a break of structure or price to break through or continue the trend, if it's in an uptrend, it must keep breaking the recent highs. It must break every structural point you can see. If price is in this format and creates this structural high here and this structure that you want price to come and break, if it's like this, if price just come to this point and goes back without breaking this, you have not gotten a break of structure, or this uptrend has not continued. You don't know if this uptrend is still in line or it wants to end. Until this structural point is broken, is taken out, before you can have a break of structure, or the trend has now continued to the upside. But if it does not break and continue moving down, have in mind that maybe it wants to change trend, or it wants to consolidate in a ranging format. For you to call a break of structure or continuation of trend, it has to break this recent structure. This is a structure, a high structure that it needs to break for it to form a new structural high. And once that happens, once it breaks through, you can call this a break of structure. Once that happens, you can call this a break of structure. And also the trend has now continued. So until you see something like this in an uptrend, before you can identify that yes, there is a break of structure to the upside, which is continuing the trend, that's just it. So an uptrend is when price keeps breaking structure to the upside, forming higher lows and higher highs. It should be like this. You must see it in this format before you think that yes, this price has broken structure to the upside, or before you can identify a break of structure. If it is not like this, just leave it. If it's not clear to you, just leave it. Any chart that is not clear to you, run away from it. Go to chart that is more clearer, that you can see and identify very well. So let's go to the downtrending market. So in the downtrending market, price keeps breaking structure to the downside. If in an uptrending market, price breaks structure to the upside, then in the downtrending market, price breaks structure to the downside. So in the downtrending market, price breaking structures, lower highs and lower lows. So this is it for the downtrending market. you can find price breaking structures to the downside. Now, it's no longer to the upside. The upside is for the uptrending market. Now, for the downtrending market, price keeps breaking structures to the downside, forming lower highs and lower lows. It's clear. Now, what you have is you want to see a structure in this format that requires price to come and break through to continue to the downside. Now, this is a structural point. Remember, in the uptrend, we have the structural point facing upward like this, where you have the structure that you want price to come and break to be to the upside. But in the downtrending market, the structural point is facing downward, and now you want price to come and break it to the downside. Keep that difference. Have that in mind. Have that in mind. So the downtrend market, price keeps breaking structure to the downside. Now, this is the structural point. Now, you then have your lower high here. You have your lower high at this point, and you have your lower low that price has created, which is the structural point, the lower low that price has created. Now, this lower low tends to go up to create a new lower high, forming these down structural points here. Tends to go up to form a new lower high. Went up to form this new lower high. Now, you can see when price formed this new lower high, it went down to break this structure to continue the downtrend. If it has not broken this structure, then you have no continuation of this downtrend until it breaks this structure before you can identify either a break of structure and a continuation of trend. So once that happens, you then have a break of structure at this point. You then have a break of structure at this point because price has broken the recent structural point, which is this level. It has broken the recent structural point, which is this level. It has broken this recent structural point, which is this level. Obi, do you have a question? You're raising up your hands. Remember, you muted your mic. So if there's no question, let's continue. So until price breaks this structural point, you don't have a continuation of trend or a break of structure. So wait for price to break through. Remember, not breaking with a wick. It shouldn't break with a wick. It should break with a body. So when price breaks through with a body, then you have a break of structure and the continuation of the trend. Then what you then have is this new lower high that price has formed. We then pull back to form a new lower high, causing out a new structural point here that needs to be broken to continue the trend. I hope you guys are following. We then create a new lower high here, and we then make up a new structural point that want price to come and break through to form a break of structure and the continuation of the trend. So what you have is this new lower high, we then break through to form a new lower high and also a break of structure to continue the trend. So you then have your new break of structure here and the continuation of the trend. So this is how it continues going, forming a structural point and breaking it depending on the trend. If it's an uptrend, forming a structural point at the upside, then come down a little bit to break through to continue the trend. If it's in a downtrend, price form a structural point at the down level, then pull back a little, then forming a lower high to come down to break through that structural point to continue the trend, forming a break of structure also. So it should be clear like this. If it's not clear like this, just leave the chart. Don't complicate things. It should be clear like this. So this is for a downtrend. This is how you see a downtrend. When price breaks structures to the downside, forming lower highs and lower lows, lower highs and lower lows, lower highs and a lower low. So this is it. So let's move to the ranging market. So the ranging market now. The ranging market, this kind of market is when price has no direction yet. It gives you no direction either to the upside or to the downside. The price keeps moving sideways. Within the lines of support and resistance. So price keeps moving sideways within the line of support and resistance. It's just like when you spray perfume in a big space. It diffuses around, just moving randomly without no direction. That's just it. So in a ranging market, the market gives you no direction, either to the upside and to the downside. And as a trader, you want to do two things in the market, either to buy and sell. And for you to buy and sell, it depends on the trend. If you want to buy, you have to buy in an uptrend, and which is defined. And if you want to sell, you want to sell in a downtrending market, which is defined. So in a ranging market that gives you no direction, you don't want to do anything. You just have to wait for the market to give you direction before you go in. So in the ranging market, what you have is market just move up down in a sideways manner within the line of support and resistance. Now you have something like this. Market move this way, comes down. It's neither breaks through this structural point nor come down to break this structural point. It just keeps going the same manner. Keeps going the same manner without breaking through. If it has broken through, then you know that maybe you want to have an uptrend because it has broken this structural point here. But it did not. It just continued. So you have something moving within the line of a resistance that rejects the price down, and within the line of a support that rejects the price to the upside. So this will be an area of support that keeps pushing the price to the upside, an area of support that keeps pushing the price to the upside, and an area of resistance that keeps pushing the price to the downside. So in this kind of format, when you see price moving in this kind of format, all you just want to do is to wait for price to give you a defined direction. Either it gives you a defined direction to the upside or a defined direction to the downside. So how do you trade this kind of trend? The only way to trade this kind of trend is to wait for price to give you direction. How the price gives you direction? Once price keeps moving within this resistance and support, you just want price to break through this resistance for you to know that yes, there's now a break of structure to the upside, which is this structural point here. There's now a break of structure to the upside. That tells you that yes, it entails that the price now has moved to the upside, breaking a structural point to the upside. Now it's for you now to wait for a little pullback to give you, it gives you a little pullback for you to have a higher low, which is okay for you to buy from. So at that point, you can decide to buy from here to the upside. This is the only way you can trade a ranging market. Once it breaks out from either the resistance or the support level. So if it's from the support level, once price breaks through the support level, it tells you that yes, it has broken this structural point here to the downside, and that entails that it has now started a downward push. So from that point, you want to wait for a little pullback to create a new lower high and then a movement to the downside. So all you just want to do is for price to create, let me bring this down a little. So all you just want to do is for price to come back to create, to create a new lower high for it, which is a right place for you to sell from. Then you sell to the downside. So this is the only way you can trade the ranging market or consolidating market. When price keeps consolidating to within the line of support and resistance, you just want to wait for it to give you direction. And how do you give you direction? You wait for the breakout. Once price break out from any of the direction, wait for a little pullback or retracement, then you can choose the direction or the bias, which if it's buy or if it's sell. If it breaks on the upside, you can choose to buy, and if it breaks to the downside, you can choose to sell. So this is how market structure works. So let's go back. Where do you buy from? In the next question is, where do you buy and where do you sell in either in an uptrend or in a downtrend? Where to buy and sell? That's the next question. Where to buy? You give you guys a little hints on the ranging market. Where to buy and where to sell. Where to buy and where to sell in a defined trend. What I mean by a defined trend is a trend that is showing you the right direction, either the uptrend or the downtrend in a defined direction, in a defined trend, So where to buy and where to sell. Now, in an uptrend movement, when price keeps making structures to the upside, you have something like this. Price keeps moving to the upside, forming higher lows and higher highs, breaking structures to the upside. Now you have these structural points being broken, and then you have a break of structure to the upside. You have a break of structure to the upside, and there you have this structure being broken, and you have a break of structure to the upside, which defines the trend to be a bullish or uptrend market. So remember, you have your higher low here, you have your higher low here, you have your higher high at this point, you have your higher high at this point, you have your higher low here, you have your higher high at this level, you still have your higher low at this level also. Then lastly, you have your higher high. So when price keeps moving in this context to the upside, where are you supposed to buy from? Because this is an uptrending market. In an uptrend market, you want to look out for buys. In an uptrend market, you want to look out for buys. So the trend should always be your friend. In an uptrending market, look out for buys. So if you are looking out for buy in an uptrending market, where are you supposed to look out for the buy in an uptrending market? When you know that price forms a higher low and the higher low tends to form a higher high, creating a structural point. Now, when that higher high comes down to form a new higher low, you then have in mind that if this higher high is coming down to form a new higher low and then getting a new structural point, then you have in mind that this higher low definitely goes up to break this structural point for it to continue the trend. If that, then for every new higher low, you are thinking to buy because you have in mind that once a structural point is formed, once this structural point is formed, this higher low here will definitely goes up to break through, to continue the trend and have a break of structure. So if you know that this higher low will definitely go back to the upside to break this structural point, you're supposed to know that this place is the right place to buy from because you want to continue the trend. Because immediately you buy and price keeps moving up, that's when you'll be in profit. So if you can catch up that point, that when price creates a structural point and it comes down to form a higher low, then that higher low needs to go back to break that structural point for it to continue the trend, then that is the right place to buy from. So for every higher low, you are needed to buy. So at this higher low, you can buy from this higher low, you can from this higher low, you can also buy from this higher low, you can also buy from this higher low. That's it. Because for every higher low, it tends to go back up to break its structural point. So for every higher low, you want to look out to buy. Once price creates a structure and coming down to form a new higher low, that is when you want to be looking out for buy for every low point. So in an uptrend, you buy at the low point. The low point I'm talking about is the higher low. That's what I mean. So let's go for the downtrend market. So remember, the low points here I'm talking about depends on the strategy you are using, either the support or resistance, because in the support level, you can find it at the low point, or it can be an order block, you can find it at the low point. It can be a demand zone, you can find it at the low point. So it depends on the strategy you are using. You understand? On an order block, you will definitely find the order block at this higher low points. So let's continue. Let's go to the downtrend. Where do you sell in a downtrend? So in a downtrend, when price creates this structural point to the downside, this moving, breaks structure to the downside, comes back up, create a structure and breaks it to the downside again, create a structural point, comes down again and breaks through. Once you have this, you see that price keeps breaking these structural points, to continue the trend and form a break of structure, breaks this lower point, to continue the trend and form a break of structure. This keeps saying the same thing, break the structural point to continue the trend and form a break of structure. So once you see this, you know that price is definitely in a downtrend. And where do you sell from? Since you know that once price creates a structure facing downward and want price to come and break through this structural point, have in mind when price creates this lower low here, because definitely you have your lower highs, here, and you have your lower lows to this side. You have your lower highs here, You have your lower lows here. You have your lower highs, and you have your lower lows here, and you have your lower highs, and finally you have your lower lows. That's it. So since you know that once price creates this lower high here, it tends to go up to form a new lower high. Once price creates this lower low here, it tends to go up to form a new lower high. And for it to continue this trend, this lower high has to push down. It has to push down to break this structural point, to either get a break of structure and to continue the trend. That is the point. So once that happens, you have a break of structure, and now the trend is now moving in alignment. So since you know that for price to create a structural point, which is the lower low, and then goes up to form a lower high, whereby that lower high needs to come down to break that structural point of the lower low, that tells you that for every lower high you see, when price creates a new lower high, you want to look for an opportunity to sell in a downtrending market. So for every single lower high, you want to look out for opportunity to sell from every single lower high that price has created. You want to see an opportunity to sell from, because you then know that that lower high will then push down to break a structural point to continue the trend and also be in alignment, forming a break of structure. So for every single lower high that price pull back to form, you want to sell from. So you must see it in these formats. If you don't see it this way, don't just jump in. Let it to be clear. Make it to be clear to you, so that you won't keep making these upon mistakes. So for every lower high that price creates, you want to see an opportunity to sell, because that lower high will tend to break through that structural point that the lower lows has created to form a break of structure and also to continue the trend. So for every single lower high, you want to look for opportunity to push down for a sell. That's just it. So this is where to buy, this is how to buy, and this is how to sell in the Forex markets. That's it. So I think we are done with that. So now the next thing I want to show you guys is how to differentiate the difference between a break of structure and when a trend has changed. Now, this is it. If you have a downtrend, if you have price moving to the downside, forming a structural point, and then price tends to break it, goes up again, forming a structural point, and then price tends to break it. Now, instead of this price to continue moving in this format, creating lower highs and lower lows, price then comes up again. Instead of respecting this area to keep going down, it comes up to break it out. Now, this trend has automatically changed, because you have your lower high here, and you have your lower low here. You have your lower high here, and here you have your lower low. Here you have your lower high here, lower high here, and here you have your lower low. Now, instead of price to continue this trend to the upside, you then see, instead of you to see price to continue this trend to the downside, just obeying this low and then coming down again, what you see is the price comes up to break this lower high. And once price breaks this lower high, it has go against the trend, the current trend. Now, this point, you have what we call a change of character, which is represented by CHOCH. A change of character, or you can see it in some ways like market structure shift, MSS. Market structure shift, MSS. It tells you that the trend, the current trend has changed, either from a downtrend to an uptrend, or an uptrend to a downtrend. So once you see this, you know that this trend has changed. So we want to expect a bullish trend now. Price forms a higher high, comes down to form a higher low, and break these structural points to continue the new uptrending market. That's when you now have a break of structure. So have in mind that a break of structure is to continue a particular trend. A break of structure is to continue a trend. A break of structure is to continue a trend, is to continue the trend. Why the change of character, CHOCH, or the market shift that you may call it, is to identify in trend. So get this right, please. A break of structure, BOS, is to continue the trend. A change of structure is to identify a change in trend. So if price was moving in a downtrend and tends to break structure to the upside and tends to break the last lower high, that's when you now use the change of character. That's changed the trend from a downtrend to a uptrend. Or if the market is moving to the upside and price tends to break the recent higher lows, that's when you use the change of character. But if price is in a particular trend like the uptrend, breaking structures to the upside, you keep using break or structure, the BOS. So this is the difference between break of structure, BOS, and change of character, CHOCH. So the change of character, you can see it in market structure shift or market shift. Tells you that the trend has changed. So that's all for market structure. So let's go to the chart to see some examples. So now I said this is how you are simply identify the trend. You can see price break structure to the downside here. Break structure to the downside, forming a break of structure. It breaks this structural points here. This structural point here, broke it and caused a break of structure to the downside. And once that happened, a new structural point is created here, and price broke it downward again to continue the trend. And now, instead of continuing the trend by going up and breaking this structural point again, price tends to come up and break this lower high. That's when you now have a new change of character to the upside. Now you have a change of character, and you can see market form a high point, came down to form a low point, and caused a structural point that this higher low tends to go up to break this structural point and form a new higher high. And this higher high then have a new structural point here that it has created, and came down again to form a higher low, where this higher low went up to break this structure to form a break of structure and to continue the trend. And you see it keeps continuing in that format. Price creates a higher high and have a new structural point where it came down to form a new higher low that went up to break the structural point to cause a break of structure and to continue the trend. Now, instead of price to continue in this format, you can see this higher low that was supposed to be respected, price came down and broke it. That's when you now have a change of character to the downside. And then you have a new trend. Price now start forming a lower high and a lower low. And this lower low that have a structural point now went up to form a higher high. Went up to form this higher high that came down massively, where you can sell from and break this structure point, forming a break of structures and to continue the trend. So this is how it keeps going. This is how you keep seeing price, and this is how to identify it, to know the trend, if price is in an uptrend or in a downtrend. And you have a consolidating market or ranging market here, where price keeps moving up and down within the line of support and resistance, where we say you just have to wait for price to give you direction before you can decide on what to do. So this is how to identify market structure. This is how to identify the trend of the market. This is how to identify the direction of the market. So if you do not see it in this format, or if it's not clear to you in this way, just leave it and go to the next chart. Don't complicate things. Just make it simple. Just make it simple. So is it clear? Is there any question? So I guess this is the end of our class, and this is the end of market structure till we get to deal with the next topic, which is zone.